I expect they're going to fight gold all the way, at least to the last minute when they revalue it. I think they will have to, the central banks will have to make it look, they took control of the gold price. The market didn't take the gold price control away from them. That's why I think Brodsky and Quaintance were right, that a long-term plan here to revalue gold, a much more sustainable level. That, we've had 50 years of gold price suppression. I think supplies are getting very tight. Disagreement among central banks about gold is indicated by their purchases. I think at some point central banks will get together through the BIS and revalue gold to what they consider a much more sustainable price level, and then they will engage maybe in another half-century of gold price suppression.
Globally, central banks continue to buy gold at a historic pace, boosting demand in the third quarter to 1,147 tons, 8% ahead of its 5-year average. The unrelenting pace of buying by central banks has helped bolster the price of gold, even as the U.S. dollar and bond yields surge, both of which would normally lead to lower gold prices. 14 years ago, Jim Rickards perfectly summarized Lip's premise as he slipped a profoundly subversive comment past the censors on CNBC. "When you own gold," Rickards said, "you're fighting every central bank in the world." Chris Powell of the Gold Antitrust Action Committee expresses his belief that there appears to be a strategic plan to revalue gold to a more sustainable level. He anticipates a potential conflict in the gold market, speculating that central banks, possibly acting through the Bank for International Settlements, BIS, will aim to assert control over the gold price. Regarding the reliability of reported gold reserves, Chris expresses skepticism about government official data. The world's central banks own the largest gold reserves, accumulating more at a rate not seen for over 50 years. A recent World Gold Council survey reveals that 71% of global banks plan to beef up their gold holdings in the coming year. There has always been speculation that China holds far more gold than it officially reveals. Last year, there were large unreported increases in central bank gold holdings. Central banks that often fail to report purchases include China and Russia. Many analysts believe that China is the mystery buyer stockpiling gold to minimize exposure to the dollar. There are deceptive practices surrounding gold data reporting to international bodies like the International Monetary Fund, IMF, where central banks can report gold on loan as if it were still in the vault. Due to such deception, Chris suggests that official gold data from governments may not be trustworthy. Stay tuned for clips from Chris Powell's interview with SOAR Financially, where he delves deeper into these issues. If interested in more insightful videos, hit the subscribe button and turn on the notification bell for regular updates. Thank you, and enjoy the video.
I think the central banks, through the BIS, are preparing for a much higher gold price. I mean, the acquisition of gold, which has been dramatically increased over the last year and a half by central banks, is an acknowledgement of that. Central banks increasingly see gold as a first-tier financial asset, an asset equal to U.S. dollar cash and U.S. Treasuries. So that has been made explicit by the BIS's new Basel III regulation. Some people, I think particularly the U.S. economists Paul Brodsky and Lee Quaintance, believe that the major central banks have been working together for some years now to redirect the world financial system away from the dollar and toward gold, so that when the excessive unpayable bonded debt of the United States and other major countries crashes or is devalued, the devaluation will be offset by the gold reserves that central banks are increasing, so that they will be they're hedging themselves against a forthcoming devaluation of the dollar and other currencies. I mean, any demand tends to support the price. Any physical demand, anyway, supports the price, and that physical demand has, been admitted by the central banks that have been, buying gold. But I think Brodsky and Quaintance and a few others are expecting a formal revaluation of gold by central banks, where they will peg the gold price at a much higher level. And in doing so, they will create reserves for central banks that are holding gold reserves. They will create cash reserves even as bonds and currencies devalue. They're hedging, we believe, against the likely devaluation of currencies and government bonds. You can't rely on central bank gold reserve official totals. They're not reliable. You know, China went for some years without reporting any change in its gold reserves, and 2 or 3 years ago, all of a sudden they had an increase in reserves by more than 1,000 tons. They didn't acquire those reserves in just one reporting year. They were acquired by over a much longer period. China stores, we believe, or accounts for a lot of its gold reserves on the books of its government-owned banks rather than on the books of the People's Bank of China. So while the People's Bank of China may report that has 3,000 tons of gold, the Chinese government banks may have another 5,000 tons of gold that are not put on the books of the People's Bank of China. This happened with Saudi Arabia, I think, about 10 years ago. The World Gold Council, I think, once reported that there'd been a big increase in Saudi Arabia's gold reserves. There was some sensation about that, and a few days after, the head of the Saudi Arabia Monetary Authority made a statement saying, "Oh no, they had not acquired all that gold recently. They just have been keeping it in other accounts all this time." So the figure that they reported to the IMF showed this gold as an increase, and then they decided to deny that it was an increase at all. So I don't think you can rely on official gold data from governments, because there's just so much deception here. The International Monetary Fund, which tracks gold reserves, allows central banks to report gold reserves as if gold in the vault and gold out on loan are the same thing. A central bank could have 1,000 tons of gold reported to the IMF, and 900 tons of that could be loaned out and not even in the vault anymore, but the IMF would allow the central bank to keep reporting that it had 1,000 tons of gold when most of that gold was impaired.
Gold swaps conducted via the BIS involve exchanges of gold among central banks and bullion banks, moving custody of gold around without necessarily physically transferring gold itself. In effect, gold swaps, along with gold leases, often allow central and bullion banks to strategically apply gold to markets where, according to the central bank members of the BIS, the gold price most urgently needs to be discouraged or controlled. Regarding the impact of these swaps on the gold price, Chris suggests that a higher number of swaps may correlate with a restraint on the gold price. However, he acknowledges that direct tracking of swap levels against gold prices hasn't been conducted. The primary objective is likely to suppress interest in the gold price. Central banks utilize swaps to introduce more gold into markets experiencing high demand or stress, thus influencing the price. Chris suggests that with the Basel III regulations compelling bullion banks away from the paper gold market, central banks might face intervention challenges. He anticipates that they could be preparing for new arrangements in the world financial system and speculates that gold might be revalued substantially higher in the future. Let's get back to the interview.
One way we follow it really uniquely among all organizations, analysts in the world is through the monthly statement of account of the Bank for International Settlements. If you read it closely and do some calculations, you can figure out the number of gold swaps that the bank is maintaining in any particular month. We have a consultant about the BIS in Britain, Bob Lambourne, who is doing this for some years now, and how many gold swaps the BIS has engaged in over the last 3-4 years. This number of swaps has gone up, and then in the last year it came down. It came down to 0 in one month, and then a few months ago it started going up again. But we know our calculations are correct, because while the BIS does not explicitly list the number of swaps in its monthly report, it does list its swaps in its annual report, at least for the period of the annual report. And the annual report has confirmed Bob Lambourne's calculations almost, well, I wouldn't say to the penny, but the last annual report showed that Lambourne's calculations were off by only 1 ton of gold. We're very confident that our calculations are correct, and I'm more confident about it because when I asked the BIS whether Lambourne's calculations are correct, they refused to reply. Tracked the swap levels against the gold price, but I believe that a tracking of it would show that the more swaps, the more restraint on the gold price. Have been, to be honest here, the swaps are down substantially over what they were, say, 2 years ago. We believe this decline is largely a matter of bullion banks, who are sometimes swap partners with the BIS, getting out of the paper gold business in compliance with the BIS's Basel III regulations, which really impose a financial penalty on banks that are trading paper gold and don't have the physical gold to back it up. We believe it's almost certainly tamping down interest in the gold price. I think they are basically applying metal to the markets that most need gold in order to keep the price down. The gold in the swaps has to be returned unless central bank agrees to sell it. The swaps are a mechanism applying more metal to markets in times of stress and in times of high demand. And I think they're running into trouble right now because the BIS Basel III regulations do seem to be driving the bullion banks out of the paper gold market. I mean, there's still intervention according to the monthly statement of account, but I think they are preparing for new arrangements in the world financial system that I suspect are going to revalue gold substantially higher.
Central banks, including the U.S. Federal Reserve and European central banks, continued record gold purchases this autumn. The average price of gold per ton in 2023 is $62 million, with central banks investing nearly $50 billion collectively. What are your thoughts on the interview? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.